What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market and also covering the Sofi stock. It's been a crazy month, the last month, extremely volatile, a lot of economic data, a lot of macro. And I know this upcoming month may not be the best month in, historic terms. A lot of people have been saying September is going to be the worst month of the year. It's definitely a possibility, but there's a lot of different things going on right now. Potentially some good news and also some potentially bad news. We're going to be covering that inside of this video. If you find any of this information useful, be sure to smash the like button. Let's try and get the video to 1,000 likes. Don't forget to drop a comment. What are you doing inside of the market right now? Crazy market win. Are you buying? Are you selling? Are you holding? What are you doing? I want to hear it. I'm going to be commenting back to as many people as I can. And if you are not subscribed to the channel, don't forget to subscribe to the channel. Let's try and get the channel past 15,000 subscribers. Let's get into it. All right, guys, we usually don't start with this inside of our videos, but let's just start off with the NASDAQ. We know the tech heavy. What did we get the last month? Guys, I apologize once again for taking off. I think the last video was like 12 days. It's just been a very boring market, and I've been busy with work. We are back now, but as you can see, for the past month, 1 month, we got a 0.42% gain. Very, very, very flat. We'll check out the year to date, see what's going on. Still up 35%, guys. I mean, that is a lot of returns, and we already know the big reasons why that is happening is Microsoft, Nvidia, Apple, Google, Tesla. I mean, the top 5 have just been propping up the entire market. Small caps haven't got a hit in 2 years. It continues to have this small rally and this comes back. So small caps has not got a return, since 2020, 2021. I mean, mega caps have been propping up the NASDAQ. If we go back to all-time highs when we were in that fantasy land and just snag it from now, we're still down 13%. So we're still not back to 2021 levels yet. So a lot of different variations. I mean, we're catching up to the valuations we were at 2 years ago, and we're still not there yet. Basically had a 2-year pause for opportunity for companies to just continue to grow to catch up to those 2021 valuations. So, all right, guys, we need to look at this because a lot of people have been putting this information out on the Twitter and stuff like that. What are the average stock market returns by month? We'll go down here and boom, guys. We can see August was the second worst month of the year for the past 40 years. And of course, September right now is the worst month of the year. So potentially we might see a 1 to 2% decline if we go back to historic averages. But a lot of things are different right now because we're in the middle of a Fed potentially, hiking again and raising again after 10 continuous rate hikes. So that's the difference. This hasn't happened in, a couple of years. So that's not justified every single year for 40 years. We could be getting some good news after, 10 plus rate hikes. Are we finally going to get a pause? I mean, that might rally the market back and we might get a 1 to 2% return. You never know, but just know August was completely flat. And this is the information we have from Barron's right now, 7 hours ago. Fed futures point to a pause after the jobs data came out today. It looked like the jobs data came in where we wanted to. Unemployment increasing and stuff like that. Fed futures have penciled in a 93% chance of a pause, according to the CME FedWatch tool. Additionally, expectations for another pause at the Fed's November meeting have risen to 65%. So it looks like September pause, October pause, and then it continues to go up. November rate hike. But yeah, pause is good at any given moment because we've had 10 in a row, and people are starting to feel the heat with these rates this high, especially for cars and houses. But this is something to look at. I got to check when the CPI data is coming out. Remember, guys, if the CPI data comes in hot, it's going to go from 93% chance of a pause to 20% chance of a pause. So CPI data can change this in a blink of a second. All right, I want to get straight into the SoFi stock today. We were doing pretty good, guys. At some point, we were up 2.7%, 2.5. We hit about 889, 890 3 times, but then we had that nasty SoFi market dump at the end of the day. But if we look at the 1 week chart, I mean, we're up 5.5%. So this stock has been absolutely battling day by day, just 1.5, 2%. I mean, we're finally getting some green days after a bottom of around 790. So we've gone from 5 to 8, 5 to 8. I think 5 to 8 3 times over the past 18 months, and now we went from 5 to 11 back down to 8. So maybe this could potentially be a different chart pattern because we've had so much growth, so much deposit growth, so much member growth. Some institutions are increasing. So maybe instead of the $5 bottom, we bottomed around 8, and it could be making a new uptrend because the company has more value. Okay, so that's the difference between going 5 to 8 for the past 18 months. So maybe we are potentially building up new support at different levels, and that's what we want to see. Especially, we know what we're waiting for, guys. We are waiting for the interest rates to come back down, so SoFi can just go on a refinance splurge across the board and just getting more members in, making more money on their interest and stuff like that, because these levels of rates are just insane right now, guys. All right, guys, we're gonna look at the options flow. Let's see what's going on bar charts. I'm gonna be completely honest with you guys. I've been watching options for SoFi for years, 2.5 years, and I mean it's been to insane levels. I've seen week in and week out 100, 200,000 plus. We are currently at extremely low levels of option open interest, especially on the calls. I mean, the next 5 weeks or so, I mean, we're talking 70, 30,000, 60,000, 20,000, 15,000, 5,000. I mean, we're talking extremely low open interest right now on the call. So this is good. You want to see lower levels because, that's usually when the market makers might let the stock move up a little because there's not such big payouts when you got, quadrupled the open interest on the calls. So this is good news. We don't get some crazy big open interest until the 20th of what is that, October. So that's about 50 days out. So open interest looks pretty good right now. And this was for the first today. So these have actually expired. So we're going back down to nearly half the open interest for next week. And it just looks good to me. Low option open interest, that just means people are getting beat up. I mean, we had 3 weeks of just pretty much nothing in the SoFi stock, and all those calls got wiped out for 3 weeks straight. All right, guys, this is what you've been waiting for. This is why I'm really doing the video today. Your federal student loans are accruing interest again, but there is some relief if you need it. Scroll down a little bit. You can see the relief is the delinquency grace period now through September 30th to the 2024. So that's 1 year after payments resume, and you can see the interest starts September 1st, which is today right now, and then the payments start October 1st, 30 days from today. That's like a 30-day grace period. Okay, so a lot of different stuff going on right now. Just know that interest is accruing right now, and people's decision to make payments is, their decision. They won't get delinquent, but it still will hurt them in the long run. So finally, we're going to get some news from SoFi. SoFi to participate in upcoming investor conference. We got Goldman Sachs Technology Conference September 6th. So that is next week, 1:05 p.m. And yeah, this is going to be Anthony Noto on the fireside chat. So maybe we can get some updates because we know that SoFi really hasn't dropped any, crazy news or partnerships and a long time, on the, updated open market. So this is finally when we really get to hear what's going on. So that is, some good news. And speaking of Goldman Sachs, we have the analyst. Who knows if he's going to be on the fireside chat, but we got Mike NG, Goldman Sachs, Wall Street analyst, star rating 1/15th of 1 star. So we need to take his price target extremely serious. Because this guy definitely knows what he's doing inside of the market. We got Mike NG with a $7 price target and 20% downside. So that makes a lot of sense. So remember, be sure to follow Mike NG. He is ranked 32,700 out of 34,000 Wall Street analysts. I mean, I don't even know if they're going to put this guy on the call. I think his career is just to be the worst analyst ever. He gets paid for those nasty downgrades and bonuses because he knows his career's ended. And then the big banks can make moves behind those price targets and accumulate some shares and stuff like that, because Goldman Sachs, we'll take a look, has a pretty nice position. We'll look at institutional ownership real quick before we look at Goldman Sachs position. 38.2%. I remember, guys, I've been following this for a while. We were at 31 to 33% a quarter ago, 3-4 months ago. So it's jumped up, 5% or so. And if we take a look at what the big whales have been doing, let's see real quick. We can see Vanguard, Silver Lake, increased by 6%, 0%, and the D Shaw, their top three, 293%. So nobody's selling was what you need to know. The top 10 holders, nobody's selling. Everyone is adding. And if we go to Goldman Sachs, I mean, look, guys, they're literally top 15 right now. They got a big put on, but they also have shares too. So it looks like they're hedged. Valuation 41 million shares, valuation 42 million put. So their put is the exact same as their call option right now, but something to look into. They have position, but their price target is awful right now. So just crazy things going on inside of the market, guys. Once again, the good news is that SoFi is going to be giving us some updates very soon from Anthony Noto. Some more good news is potentially a rate hike pause, or a pause in the rate hikes. That's good news. The bad news is this is historically the worst month inside of the stock market. So we need to try and change that, hopefully. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you guys. I hope this video gave you a lot of information inside of the market if you've not been following it very closely. We got a lot of things coming our way very soon in the next 1 to 2 weeks. Once again, guys, I took a break because of the crazy macro data updates every single second. I feel like this is really hurting small caps, especially because small caps, need the funding, they need the money, they need the investments to grow. And if you got interest rates, this high right now, the small caps have been, just sitting there for a year and a half, just doing nothing. Probably even longer than a year and a half. I mean, it's just mega caps taking off because they're all profitable. We understand that, but some of these small caps, like a SoFi, could potentially be, strong, profitable companies in the future. And, we need rate hikes to come down so we can, get more money flowing inside of the market. So hopefully we get a rate hike pause, and we have the investor conference coming up. So a lot of good information. Be sure to smash the like button. Don't forget to drop a comment. Once again, I hope you enjoyed this video. My name is Kyle. Have a great day.